PTET tax strategy continues to be one of the best tax strategy for business owners going into 2025, and as a matter of fact, it's going to get even better. If you haven't utilized a pass-through entity taxation, PTET, in your business, stay tuned, because in this video, I'm going to show you what is this tax strategy that can generate significant tax deductions for you and your business, and what can you do today, starting today after this video, to implement it and start generating business tax deductions in your business using PTET tax strategy. Ready? Let's go. Hey, thanks so much for watching this video on my YouTube channel. My name is Boris Musheyev. I'm a CPA and a tax strategist. Every week, I release a tax strategy video here on YouTube. For you, the profitable business owner, my goal is to completely simplify this tax strategy so that you can understand it. At the same time, you're able to go ahead and implement this tax strategy, or at least take it to your accountant so he can implement it for you. But if you don't have a tax advisor, you gotta get yourself a tax advisor. So these tax strategies could be implemented for you in your business. Thank you so much. Don't forget to subscribe if you love the video. Let's go ahead and start saving you money on taxes. All right, awesome. Let's get started. By the way, if this is the first time being on my channel, please subscribe. I release a tax strategy video for business owners, which will help you maximize your tax deductions. Let's get into what is a PTET. I'm going to talk through an example over here, exactly what you need to do as a business owner to get this deduction. But we first need an introduction of what is a PTET. In 2017, there was a Tax Cuts and Jobs Act, a new tax law passed by President Trump. What that tax law did is it limited how much you can itemize your state taxes on your personal income taxes. $10,000 SALT cap deduction. By now, you probably know about this, right? Basically, and I just want to give you a little bit of introduction, there was a $10,000 limit that they put how much you can itemize. I'll give you a quick example. Let's say you live in a state like California. I'm using California because it's a high income state tax rate, but also helps us with an example. Your property taxes for this example is $15,000. So before TIGJA, you were able to deduct $15,000 when you're itemizing your tax return, okay? Additionally, if you paid state income taxes to California for earning income in that state, $30,000. In my example, altogether is $45,000, right? Property taxes, $15,000, state income taxes, $30,000. Before TIGJA, before passing of this law, you could deduct, entire $45,000 on your personal income taxes. After TIGJA was passed, they put a SALT cap. SALT stands for state and local taxes. They said, you know what? Whatever you pay your state and taxes, it's no longer deductible. You can only take $10,000. Huge slap to a lot of taxpayers, okay? Although TIGJA had a lot of great provisions on the tax law and so forth, but this one was my least favorite until, okay? So let's just take a step back. Now you can only deduct $10,000, okay? Before I continue what the states did in your favor, right now, President Trump was reelected again. And as a matter of fact, today in the morning, I ran in Bloomberg Business Week. He's meeting with some Republicans, and they're thinking to increasing the SALT cap to $20,000, which is actually even better news for us. I will explain to you how. Now, let's take a step back. We said you can only deduct $10,000. So what happened? States were not happy about it. They're like, what do you mean? The residents of our states are paying us income taxes. They were able to deduct these income taxes, and now they can't. So they came up with what's called PTET. I should have wrote it here, but pass-through entity taxation. It's a completely voluntary tax, okay? The states said, listen, why don't you pay us a business tax instead of state income taxes? For example, you can convert your state income taxes into a business tax and get that as a business tax deduction. More details on this right after this break. Hey, thank you so much for watching my videos so far. I wanted to give you a heads up. I've got this free PDF, 7 tax write-offs that every S-Corporation business owner must know. The link to this free PDF is down below in the description. So to make sure to download it, that's it. Now let's get back to the video. All right. So now that we're back, let's talk about states, right? So the states came out, majority of the states, most of the states, I believe at this point it's more than 30 states that came out and said, you know what? We don't like this. We don't like the $10,000 limit. So we're going to create for business owners what's called a pass-through entity taxation. It's a completely voluntary tax. So coming back to our example, we have $30,000 in state income taxes that is no longer deductible. So states like California, they said, you know what? Why don't we convert the $30,000 state income tax that you pay to us on personal income taxes, we're going to convert it as a business tax. And it's going to be PTET tax. So you're going to pay as a business, instead of you paying it personally, you as a business will pay $30,000, okay? We're basically converting it and creating a business tax deduction, which means it is no longer an itemized tax deduction, which means it is now a business tax deduction, and now you get a $30,000 deduction. All you did, excuse me, all you did is basically converted your state income tax of $30,000 into a business tax of $30,000, okay? And that is called PTET, pass-through entity taxation. Now, California says you're going to have two taxes to pay. You're going to have to pay $30,000 on state income tax and $30,000 on state business tax. But on your personal income tax return, we're going to give you a credit. We're going to wipe that out so you no longer have that tax. Now you're left with a business tax, and that business tax becomes tax deduction. I don't know why a lot of tax advisors still don't use this tax strategy for their clients. A lot of business owners have no idea about this tax strategy. As a matter of fact, if you are a single member LLC, most states don't even allow you to take a PTET tax deduction or pay PTET tax. We just spoke to a client who enrolled with us for tax advisory services. Almost $500,000 in net profit in his business. Single member LLC, paying ridiculous amount of tax and self-employment, and he does not utilize PTET because he can't. He's a single member LLC. We're converting him to an S-corporation. Now, not is he only saving money on the self-employment tax, but he's also not qualifying to pay PTET tax, which creates a huge tax deduction for him and his business. He was blown away. And if you're not using PTET tax strategy with your accountant, you're completely missing out on huge tax strategy. This is not something for which you have to pay extra. You don't have to invest into anything like a retirement account. You don't have to take the money out of the business to create certain deductions. You're just converting the tax that you are already paying from a personal to a business, and you get a deduction. Now, your next question, Boris, how do I do this? How do I sign up for PTET? What are the requirements and what do I need to do? And we'll talk about it right after this break. Hey, thank you so much for watching my YouTube video. Just a quick commercial break. If you like what you see, please like the video. As a matter of fact, share it on your YouTube so that you can help other business owners to save money on taxes. I would also appreciate it very much if you subscribe to my video. If you like, share, or subscribe, it really helps me with the YouTube algorithm, where YouTube will really push this video to other business owners and they can learn how to save money on taxes using simple tax strategies that I teach with my whiteboard strategy. Thank you so much, and let's get back to the video. Awesome. Now let's get back to how can you start paying PTET? How can you start converting your personal income tax to a PTET as a business deduction and get a best of both worlds, okay? Now, let's talk about it right here. First of all, you need to apply for it. A lot of states require you to apply for it because it's a voluntary tax. You have to make an election. I'll give you an example. For example, states like New York and New Jersey, you need to voluntarily apply for it before March 15th. If I'm not mistaken, Michigan, you have to apply for it before June 15th. With the state of California, you don't have to apply for it, but you have to make your quarterly estimated payment before June 15th. The point I'm trying to make, this tax has a deadline. That's why I'm shooting this video in the beginning of the year for you. So you can speak to your tax advisor. I hope you have a tax advisor. Please tell me you have a tax advisor. So you can speak to your tax advisor and be like, hey, are we doing this? If we're not, can we apply for it? I want to make sure I'm getting this, okay? Number one, apply for it. Number two, pay your quarterly PTET taxes, I tell all of my clients, I'm like, look, every quarter my team is going to work with you to calculate your estimated quarterly tax payments. If for whatever reason you don't want to pay quarterly estimated tax payments, you don't believe in it, you make more money in the money market account on those tax payments, you paid at the end of the year, all is great, I'm okay with it. The only thing I want you to do, if you see the word PTET, pay it. Because generally, you don't get a tax deduction for paying taxes, but you get a tax deduction for paying PTET taxes. So either pay it quarterly or at least pay it before December 31st. Calculate what you pay estimated and pay it so you can get a deduction before year end. A lot of business owners want to maximize their deductions before year end. They call up their vendors and they say, can I prepay you for this? They start prepaying for their rent and all that stuff. Hello, you've got a PTET that you can pay before December 31st and get a huge tax deduction and get a huge tax break and save money on taxes. Now, what happens is that if you're paying your PTET taxes quarterly, guess what? You don't have to pay quarterly state personal income taxes for that amount. Why? Because you're going to get a credit for it. So again, in our example, $30,000, don't need to pay personal income tax, at least pay it as a business tax. Get a tax deduction, amazing tax strategy, speak to your tax advisor, amazing strategy for 2025. And it's even more amazing if they're going to increase the limit to $20,000. Because not only are you going to get the $20,000, if your tax liability is more than $45,000, for example, if we redo this example a little bit, and you're really paying more than $45,000 in state taxes overall, property and state income taxes, you got this $20,000, plus you got the PTET. Honestly, it's like one of those missed tax strategies by a lot of people. Definitely speak to your tax advisor. Subscribe to my channel if you love it, and I love it. See you next time.